day traders, Raghee here, and in this update we're going to walk through a day trade from this morning's live trading in the Day Traders Playbook and kind of walk you through what we did this morning and why we liked it and why I'm looking so forward to July, getting past this end of quarter, end of month window dressing and getting into the brand new month, brand new quarter. So first of all, while the day may be, at least for now, down, and this is, I'm recording this about 30 minutes before the bell, we did have, as you can see right here, a Darvis signal telling us, yeah, prices might stay contained. But within the context of the overall market, this is not a down day, but rather still a double green market, plenty of green grab candles, and it's still a buy environment. Well, how do you get a buy winner out of a down day? Well, it's really about finding the exhaustion levels, and that's really what I focus on. So let's open up the 5-minute chart here. So I've gone from the daily to the 5. Let's talk about the morning, because for me, the best trading as a day trader occurs in the morning, first 2 hours of the day. So this is roughly 9:30 to 12:30. In fact, I'm actually looking at even less than this. I'm looking at 9:30 to about 11:30. So let's just include that in this view. So 9:30 to about 11:30. Now, what I have here is a view of the market that allows me to take advantage of the open. And what we're focused on are buys, but not what most traders do, which is some sort of breakout, meaning we've taken out some sort of resistance level and we're looking for higher highs, or a breakdown where we've taken out some sort of support level and we're looking for lower lows. In fact, I'm doing something that's a little bit, I'd say, less common in the market. I think most market participants are momentum players, and there's nothing wrong with that, but there are, I think, a smaller group of traders that like taking advantage of exhaustion. And then, of course, there are those groups of traders that know when to do which, right? You have both gears to shift into. And while I do like to shift into momentum gear from time to time, the gear that allows me to control risk is the exhaustion gear. And there is a layering, so that's 2 layered, right? We're going to layer those indicators. We have the clearing range low, which we didn't know this would be the low, but clearing range low. We have a Darvis signal, and more importantly, we're on the lower end with an aggressive V-score. Now, I say aggressive because it wasn't the green, you can see there's a yellow arrow right there. It wasn't the green conservative, but it was a yellow volume signal that this is an exhaustive level. Darvis tells me it's an exhaustive level, and that's what we're looking for. We're looking for an opportunity, essentially, in this area. I'm not looking necessarily for this wick to get hit again. We're looking for this area here. And what we can do, especially during the clearing, because this was in the earlier part of the session, is we'll start looking at micros or QQQ calls. Now, for some of us, the NQ futures are perfectly fine as long as we hold support, say above 1520, even 14,520, even 14,500 even. I've got about a 20-point zone that I know I might have to tolerate in terms of secondary opportunities to get in, but just noise, easily about 20 points. So based on that 20-point risk, do I want to go with triple Qs, micro NQ, or am I comfortable maybe with just fewer minis? However that choose your adventure risk idea is, at the end of the day, this is definitely a buy, and you can see what we were able to do. So from that exhaustion level to our target up in here, synced up with the clearing range high, synced up with the V-score high, that was the morning. That was it. Nice little move, 520 to 570 on what has been a pretty choppy NAS, but I can get in, get paid, and then call it a day, especially when we've got end of month shenanigans. And one of the things I love with doing live trading on difficult days is I think the confidence that a lot of traders can walk away from on a day like this saying, gosh, yeah, my signals held, my process worked, And the only check box that matters for me is, can I say that I was able to put some money into my account by 11:30? Do I have more in my account at 11:30 than I do at 9:30? And it keeps me from beating myself up. It keeps me from home run hitting, and it keeps me on a very even keel in terms of understanding risk, right? I'm not trying to put on a lot of trades, not trying to hit a home run here. I'm going to put on an easy trade, 2 confirmation signals, and then just walk away, especially on a tricky day. And so that was today's setup. And, of course, just to elaborate, of course you can do this on a QQQ with calls. This is a lower risk now, when I say lower risk, I'm talking about lower risk in the only way that I can control risk. I don't have to be in the market. That's one way to control risk. Just flat is a position. I can trade minis. Smaller exposure position size can be a smaller contract. Smaller position size, of course, is a very easy way, meaning 2 contracts versus 4. But I could trade, say, for example, micros versus minis. That smaller contract is also less risk. So that's what I'm talking about when I talk about controlling risk. But on end of month, end of quarter days, also remember, flat is a position. And I'm looking, like I said, I'm looking very forward to next month. So I hope that helps. I think summer can be actually a tremendous time for day traders. And I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.